A very good morning, colleagues. We are about to commence with our webinar this morning. I want to take this opportunity to welcome you to our 6-part webinar series called Local Government Conversations, themed Reshaping Local Government Landscape to the Road Ahead. I want to welcome you and thank you for availing yourselves to be a part of this platform. This platform, in terms of the local government conversations, is presented to you by Future Cities Africa and the Municipal Edge. And this morning, we'd like to welcome our speakers, our panelists, and a very special welcome to you all who have joined us on this Friday morning. I'm going to get straight into the welcome and introductory for today's session because we'd like to give maximum time to our speakers. So I'm going to proceed. Like I said, today's platform is presented by Future Cities Africa and the Municipal Edge, and duly supported by CIGFARO and SALGA. And this morning, we are on our session 4 of the 6-part series, which is part 2 of local government financial management, and which is going to be dealing with national allocations or municipal services increases. And we're going to discuss this morning whether or not this presents a dilemma or an opportunity to local government. I think it's key and important to mention maybe at the very outset that the government is us. As public servants, we are the government, you and I. And so it's crucial that we maximize on platforms like this to truly begin to bring national transformation and introduce a new way of governance. And so we are thankful for our partners. We are thankful for our key sponsor this morning of today's platform, our platinum sponsor, which is the CFO Foundation. The CFO Foundation is an organization with a focus on the development of public sector, SCM, and financial officials. That is, among others, expenditure management, SCM, revenue management, compliance, and budget management. And the CFO Foundation offers leading-edge research, training, and skills development, policy and strategy development to clients in the government, state agencies, local municipalities, and private sector. And we are thankful to the CFO Foundation this morning for being a sponsor of this platform. Truly, without partnerships like these platforms would not be possible. And so we extend our sincere gratitude to the CFO Foundation for today's platform. A quick reminder, as mentioned last week, the latest edition of the Municipal Edge magazine can be downloaded free at their website, and we encourage each of you to get a copy for yourself. It has in-depth information, cutting-edge, relevant content that will truly begin to inspire and share insights in terms of what can be done in local government aspects. So get your copy of the Municipal Edge magazine. With regards to today's sessions, very quickly, like mentioned, we are on part 2 of the local government financial management. Last week, we discussed audit outcomes, and we thank you for the engagement and the participation last week. We truly had a very good engagement with regards to audit outcomes. Today, we will be discussing the national allocations or municipal services increases. Like I mentioned, we're going to be discussing whether or not there is a dilemma or it presents an opportunity in terms of building and reshaping local government. Today's session is going to cover understanding municipal fiscal allocations. Are they adequate or not? Blockages in municipal grant spending, innovation in municipal revenue recognition. We are privileged to have a wealth of knowledge and experience presenting on today's platform. Our main speaker this morning is Dr. Emmanuel Ngcobo, who is the National Vice President at CIGFARO, also one who's of 16 years experience in local government. He's also the National Chairperson for the Center of Municipal Asset Management and the Chief Editor of the Municipal Edge. He is the author of The Road to the CFO Position, an excellent resource material, an excellent book. And he's also currently preparing 2 more upcoming books, which is a practice guide for fostering excellence in asset management, as well as a book on revenue management. So he's definitely one who's going to be bringing a wealth of experience and knowledge in terms of transforming and bringing innovation into local government. So we look forward to the presentation that he will bring forward. Together with us this morning, we also have our panelists who will make a contribution, both in terms of discussions and presentations. We have Dr. Letsepa Pakkies, who is the Director of the Local Government Fiscal Framework at the National Treasury of South Africa, and Mr. Sihle Mbili, who is the President of the Institute for Local Government Management of South Africa. So we are thankful to our speaker and panelists who will be making a contribution on today's platform. We look forward to the discussions. I want to also just encourage all of our participants. Please note we do have a question and answer tab available at the bottom of your screen. Please feel free to send through your questions. As time allows, we will address as many as possible on this platform, and where possible, we will also have our speakers and panelists to answer online as well, so that we can cover as many questions as possible. With that being said, I'm going to hand over directly to Dr. Emmanuel Ngcobo, who will start with this morning's session. Thank you, Dr. Ngcobo.
Good morning once again to everyone. Hoping that within the next 2 hours or so, we'll be able to provide with some insight, useful insight, and some knowledge, as well as trigger certain thoughts that we need to start looking at going forward in terms of the subject matter at hand this morning. So I will be flighting my presentation, but before I do, let me just also apologize for Mr. Zoniane. He was meant to be the one making the main presentation this morning, but there's been a challenge that unfortunately he has to address this morning, and hence I'm the one then who will run through with this presentation. But as he did indicate, I am quite involved in most of the subject matter or the issues at hand, and I'm hoping that one will be able to actually impart some knowledge to some great extent. But importantly as well, to our panel members that are part of this session, I'm quite certain that there is much more to come once I have presented. So at this time, let me just put up my presentation, and then we will move on forward. Confirmation, Ms. Peters, that you can see my screen.
Yes, I can.
All right. Okay. At this point. Okay, no, then I am good for us to proceed. Let me just put up my video here for the sake of ensuring I don't have a bandwidth issue. All right. So we have this part 2 of local government financial management, looking at these two particular aspects of the allocations from National Treasury that are said not to be adequate in some parts of local government, but also there is another part of saying that this is perhaps an opportunity for municipalities to increase their service charges or their rate and taxes within the powers and functions that they may have. So the presentation will take that form, just to unpack it, and then hopefully then the discussions that we are to have, as well as the inputs, will then tell us which direction we ought to pursue. Understanding these allocations, especially from the fiscal perspective, I'm also trusting that our panel member from National Treasury will share more on these particulars when it comes through. I thought I just want to highlight some of these results. These were unaudited at the time for the period of July to 30th of June 2022. This is the revenue and expenditure results in local government, starting with the first point, of the actual figures where municipalities as at the end of June 2021, apology for that one that we don't have there, municipalities spent 91, let's just put it 92% of their adjusted expenditure budget once the adjustment budget had been passed in the respective municipalities. So this just tells us that municipalities don't fully spend what is allocated, but yes, there are various reasons as to why that actually takes place. Also, on the issues of revenue, only 95% was actually billed from what was initially budgeted for by the municipalities of that total initial adjusted budget of 482 billion rands. And then next point, when it comes to operating expenditure budget, only 94% was actually spent by the end of June, which is this 390 billion vis-a-vis 416 billion. And then when it comes to spending by metros, our larger municipalities, on their side, they had spent this from the budgets that they have, but I just want to highlight this particular point here when it comes to the adjusted capital budget from 32 billion, only 23 billion was actually spent by our metros. So obviously this figure is quite large if you take it for all the municipalities, which there is a slide that will actually also talk to that. But once again, as indicated, there are various factors that must be looked at. It's not that just municipalities are not spending the monies that are out there, but this is basically where things stood at the time. In relation to the past budgets for 2021, 2022, for those who might not be aware, the municipal budget or financial year start from the 1st of July and ends on the 30th of June. So when we talk of these 2021s and 2022, it means this is the budget from July 2021 moving to June 2022. What I presented earlier was the results, preliminary results of the previous financial year. So from your screen, these are the figures in terms of the budget revenue. The National Treasury had compiled and put together for all the municipalities for 2021 comes to 489 billion, which then in the other ensuing years, these are the respective increases of 517 and 540 billion rands for 2022, 2024 as per the MTREF framework of planning for municipalities. But where I also want to highlight is the fact of a deficit that is out there for municipalities, and a deficit of 4.6 billion for municipalities. Even National Treasury, as you most may be aware, that they also operate on a deficit in terms of our country's budget. But then yes, there are other means of ensuring that we still do what needs to be done. But for most municipalities in aggregated form, this is where things stand. Importantly here, this is the point I wanted to just come up to, that municipalities where currently we are, as this line says, that municipalities are basically living beyond their means, which is a sign of financial challenge. This also has direct correlation to municipal dysfunctionality, because most number of municipalities have also been now rendered dysfunctional. And what this also talks to is that most municipalities then do not have balanced budgets. So they have more of expenditure than the revenues, either in grants or either also into the revenues that they need to generate as a municipality. So just have some of the cost drivers here at the bottom. You can then read that in your own time when you receive the presentation. So that's just the context of our municipalities in the country and the figures that we are looking at. Yes, I know that some of these are general in nature as a consolidated aspect. Yes, there are pockets of excellence that we must be aware of, and also other provinces that are doing much better in terms of these particular issues that are being raised here. but just on a global or consolidated perspective, this is where things stand at the present moment. But definitely something has to be done to address the picture that we are seeing right here. I felt that us just look at how the issues of budget is dealt with, the division of revenue within the country, as per the points that I've put in. So importantly, most of us have heard the budget speech by the minister nationally of how they're going to appropriate the budget for the 3 spheres of government, but that is obviously derived through the raising of taxes, or deriving those revenues from taxes, which we all pay. And those who are in a local government sphere, today is payday, and I'm sure in your pay slips there is that money that has to go to SARS. But yes, the biggest contributor is on the business side. Then we have what is called the vertical division of revenue, which basically is more on a high level, which is a distribution or allocating of the funds to national, provincial, or the local sphere of government. And that vertical division is then politically influenced, because that is recommended by the Budget Council and as well as the Budget Forum, which is subsequently then approved by the National Assembly. The Budget Council is the Finance Minister and all the MSCs of Finance or Treasury in the respective provinces. And then the Budget Forum comprises of the National Treasuries, the COCTAs, as well as SALGA, where there are some engagement that take place, especially when it comes to local government engagement and discussions, to ensure that municipalities are also able to derive more allocation from national government, which is something that, as indicated, we are hoping to then unpack as we go along. Then you have the horizontal division of revenue, which is a process of allocating now the portion of what I just mentioned of the vertical allocations now to individual municipalities by means of a formula which has a number of variables that is looked at, which is obviously informed as well by the white paper on a local government. So at that time, we're looking at about 10% of the allocations to local government, and 90% was looked at to be derived from municipalities generating their own revenues. And that's how some of these formulas were then derived, and that is how then municipalities get grants such as the equitable share based on this. So over the years, there has then been cases that have been put forth to then say the formula needs to definitely be revised and ensure it takes effect of municipalities that are not able to raise revenues, municipalities or communities that have a lot of indigents within them, who are unable to bill and collect the particular revenues. So it doesn't exactly mean that all municipalities can be able to have their own sources of revenue. Hence, there needs to be looked at. I know that there are discussions that are taking place in this regard, especially from the Budget Forum perspective. These processes, the vertical division and horizontal division, take place simultaneously as the budget engagements do take place. Then the white paper on local government that I have made mention of, section 227, entitles our local sphere to that equitable share of the raised revenue for the national, by national treasury, in form of collating all of those revenue I've mentioned of, especially through the SARS organization. So, and the main reason for that is that municipalities then must be able to provide these basic services, render these services, and also importantly, these services must be in a sustainable manner. And that is where the issues of maintenance and refurbishment critically become so important, because we can render these services, but then they may not be sustainable, and then you have a lot of breakdowns and disruptions in services. So then municipalities receive this equitable share, And also municipalities receive the conditional grants from either the national and or provincial governments in respect of quite a number of conditional grants that are there. So the equitable share is an unconditional grant that municipalities then has to use for the operations of the municipality. And then there are various other conditional grants. Hopefully I'll then touch on in the other slides to come. And then once again, in terms of the intergovernmental transfers between the national and local government, there are three types of these transfers. Firstly, it's the agency payments, which is what the provincial governments provide to municipalities for services that they will render on their behalf. So for them rendering these particular services, then they are allocations that then are made into the municipalities. Some of them you could look at human settlements, you could look at some of the clinics that are there, the libraries. Most of these, they end up at some point when there is some expansions, what we term unfunded mandate at some point in time, but also that is a subject for another day. But this is the first type of transfers that is effected to municipality. The second one is the grants to subsidize the capital cost of investment in municipal infrastructure. The commonly known grant in this respect is the MIG, the Municipal Infrastructure Grant, that is then disseminated or allocated or transferred into municipalities. And then the last one is those grants then to support the operating budget of municipalities, which is predominantly what I've already mentioned, the equitable share that is provided to our local government. In terms of the financial and fiscal structure for the operating budgets, you have these fiscal transfers that I've been talking about that come from the National Department or Treasury in the form of the equitable share as well as other grants. Then you have the national transfers in terms of other departments and or provincial grants that come through to the municipality to inform their operating budget. And then for the municipal owned revenues, which is what the municipalities then generate, you are looking at those respective rates and taxes that they can, as well as service charges that might be there. There are other charges that municipalities raise apart from water, electricity. There's quite various. It could be the hiring of halls that they have to charge for, but some of them are quite minimal in nature. So it doesn't exactly form a major part of the revenues to municipality. Then in terms of sources of capital funds, you are looking at the national and provincial infrastructure grants. I've made mention of that, as well as surpluses that municipalities can have to be able to fund their capital works, as well as their reserves where they may have. This is also a very important aspect for municipalities, which over the years, it's something that we are also ensuring we start to look at critically, because we have infrastructure that is deteriorating through these capital funds over the years, eradicating backlogs. And now we've been able to construct certain mega projects, and they are in place, functional. But in years to come, those projects will need to be refurbished majorly or upgraded or even disposed of. That time will come because everything has a lifespan. So we have to make sure that there can be sufficient funds to then be able to undertake that. So in a case of asset management, you have depreciation that is effected on a year-to-year basis, so that municipalities are then, it should not to only be just a non-cash entry, because at most times municipalities are just looking at that as a non-cash item. But we ought to then putting aside some reserves in that regard, so that as we depreciate a particular infrastructure asset, at some point in time when we need to replace that particular infrastructure asset, then you'll have the funds to actually do that. So most municipalities are severely challenged when it comes to reserves, and it's something that must be critically looked at. We then also have the municipal borrowings, especially metros do make use of this to fund their capital works or the infrastructure, because that's what the Act permits for us to actually undertake when it comes to municipal borrowings. So that also then forms part of the sources of capital funding. And then you have other indirect transfers into municipalities, whereby some national departments or even other provincial departments, where they will then be providing certain works within a municipal area. Just a typical example will be the RBIG, the regional park infrastructure, where there will be some works undertaken in that particular municipality that is then recognized as an indirect transfer, because whatever is then built belongs to that municipality. Obviously, there are certain intricacies in relation to that, but all of those form part of the municipal capital budget. And so that just takes care of that particular aspect. And then this is the extract from the budget review of 2021, and from that, the hotla that I was talking about, where before we didn't have all these parties in place, National COGTA, National Treasury, Department of COGTA, as well as SALGA. And now it has become very vital and important that these three organizations or departments collaborate on these issues of local government, especially when it comes to the fiscal framework, in ensuring that our municipalities adequately have funds that they need in all the respective grants that are issued to them. And then the last part that we, as they mentioned earlier, that we have the consolidated budget of the country, where that deficit actually doubled, which is something of concern. I think the president has been talking about this, that apparently the economy of the country is giving him sleepless night, because obviously without a very sound economy, we may continue to have these, because we want to make sure that our businesses have a conducive environment for them to flourish, and then that will talk to our revenues also increasing in the form of taxes, and then we can then be able to allocate and decrease the deficit, as well as the borrowing cost of the country that we all know, as it has been shared, is quite large in nature. Now, this is the distribution of our national allocations. Yes, it is a bit of a outdated data. We couldn't find the recent one from Stat SA, but it's predominantly more or less the same as we stand. Yes, there are adjustments here and there, but as you can see, out of the 764 billion at the time of our national fiscus, we had 65% going to provincial government, about 500 billion allocated towards there, and only 14% allocated to local government. This also include a lot of other grants and transfers in there. Others argue that it's around 10% or 9%, but more or less that's where we are. Most of the monies are then portioned in this particular form, as you can see. And also higher education as well, at the time was only 4%. Definitely more has now been pumped in because of the free education and all of that, which we are all aware of in the past couple months or years. So it is where then we look at hence then the need and the talk of saying no, the allocation to local government must increase when you look into the holistic picture that is out there. Now let's look at the blockages in municipal grant spending, because if we are then saying municipalities are not spending, there is funds being allocated now, then why are they not spending the monies? Because if you're advocating for more money to be given, but they also can't spend, they just defeats the purpose. Then you might as well not be giving money and say optimize what you currently have at the present moment. These are some of the contributing factors. I'm sure most of you may have other factors that we have, which you can make mention of. The absence of integrated thinking and planning, as well as the issues of poor project management when it comes to infrastructure assets or projects or the construction thereof in that respect. So without that integrated thinking and alignment, especially when you look at some of the cross-boundary issues that also take place, I'm trusting the DDM model that is upcoming at this present moment in time will then hopefully address some of these shortfalls and gaps that you're experiencing within our local government. And then the multi-year budgeting challenges that are there, because some of these projects, they are multi-year in nature. So we have to ensure that you then can adequately budget for the items that we have so that you don't have white elephants, because we have seen that over the years, construction starts, but then in years to come, then it can't proceed, and then National Treasury does not approve certain rollovers because municipalities could not plan properly for these multi-year budget. And then the weaknesses in procurement planning as well, which is from the supply chain management perspective, when it comes to the issue of tenders, when do bid committees sit, do they sit, who comprise of those bid committees, and also the objections that come. Some objections, yes, are valid, some objections are not valid, but all of these then become hindrances in municipalities spending the budgets that have been allocated to them. And then this, I won't say it's recent, but it has been growing now recently. And we have been able to see some of these forums that are coming up, disrupting some of the infrastructure projects, demanding the set-asides to say that they want a share in terms of the construction and some of the works that is being undertaken. So those are some of the factors. As said, if you remember earlier, we touched on the metros, some of the underspending that is associated with metros. Most of the issues is because of what is outlined in this particular slide. Yes, there are other things, but predominantly this is some of the effects or the contributing factors into that. Also, with the COVID effects that we are all aware of, there were some shifting of funds because of history of poor performance or the low spending in certain items or within municipalities. So there had to be reprioritization of those budgets, which then funds had to be shifted, because the question was, you've got all these monies that are basically sitting in there in a form of budgets, but then we've got some priorities when it came to COVID. So we had to shift those particular budgets. So once again, through those shifting of funds, what if in years to come, then there's a need for some of those allocations to be in place? But that is something that is then now looked at, because the others are then saying, maybe there shouldn't have been a need for those budgets to have been allocated in the first place if it couldn't be spent. And then with COVID and all that has come up, the new normal, perhaps yes, we can do things differently, and we don't now need to have those budgets in that respect. This is the outcome of blockages when it comes to the spending of metros. If you look into this graph that we have at the bottom here, this just gives you the actual financial years, 15, 16, 16, 17, 17, 18, 18, 19, up until 1920. These are unaudited figures, but more or less it's what they end up being at the end. So like if you take as the largest one, the highest one in this instance is eThekwini for 1819, they were close to about 1.6 billion rand unspent at the time. And then these were the totals here in terms of then the audited amounts here for 15, 16, 16, 17, 17, 18, 18, 19, and then the unaudited in 1920. We're looking at 5.8 billion unspent by metros. And once again, you're only looking at metros in this regard. When you then take this in a broader scheme of all municipalities, then these figures will then be quite high. So that is what then we are faced with in terms of local government. And I've made mention of some of these white elephants that are there, funds that have been wasted over the years, like what I've put up on the screen. You're looking at the school that an amount of 82 million rands was spent, but then pupils are still being taught or attending classes in containers. So it's quite unfortunate. And also on the side, this Dube housing project, which costed 95 million, partially completed, but never allocated, to the beneficiaries, and then they deteriorate in nature. And then it means that whenever then you need to start again in terms of this, now you'll have a challenge because you have to spend more money now in bringing it into the state it ought to be. So there's various factors again in relation to this. Like if you look at the first one here, there were no building plans approved because at some point in time there's a rush in some of these projects because they want to spend the money so that it doesn't get taken away and all of those issues. Then you bypass some processes, but then at the end it comes back to bite. So we have to then make sure from that planning perspective, all of these things are then addressed. Yes, these could be provincial mandates, but same is true even for our municipalities. A number of these have been experienced in the past years. Also, let's look at this white elephant story. And now from an adverse impact point of view, we all know of PRASA. They spent a lot of money in the recent years, as you can see here, that I've made mention of an amount that has been spent, excess of 2 billion rands, procuring these trains. Whether they are fit for purpose, it's a debate for another day. But the adverse effect as well of buying these and they're not being utilized, then now you have the vandalism that is taking place because we have this dysfunctional railway system. Now it will be costing us more to go back and sort some of this mess out. But also what was, like in this instance, quite appalling is that as much as we have security that is in place, which millions of rands were paid, then you are still experiencing these issues of vandalism. So monies are being spent, they are there, but then are they being spent and we are getting value for money. Also, if you continue on this metro rail story, this is what Amabungane had raised, where if you look at the stats of the commuters, number of trips that have actually gone down over the years from 2009, 2010, you're looking at those quite high figures of those who were utilizing metro rail, but over the years, they've drastically dropped, as you can see the graph that is still shooting down. And the question is, do we still need to pump in money into all of these? Because if we do continue, it basically means that there's more budget now required to bail out PRASA because they now do not have sufficient revenues to actually cover the operations of what they are doing. So then this then eats into our fiscus. So again, these are some decisions that are made, and the question is, should have were analysis done, were studies done to actually procure and spend over 2 billion rands in that regard. Perhaps if we had PRASA, they could have another story to tell, but we're just looking at the stats and the facts that we have at our disposal. Now, again, all of these issues then obviously have an impact as well into the allocations into all the different spheres of government, which you must then take cognizance of. Now let's look at this last aspect of the innovation in municipal revenue generation as to whether can municipalities generate their own revenues? Can they be able to get more monies into the municipal bank account? And can they be innovative enough to have different streams of income? This slide is something that I took from National Treasury. I'm just going to focus on this particular block of revenue choices and collection. this is what municipalities, as I did touch on earlier, derive their revenues, the transfers, the borrowings, service charges, rates and taxes, and the equitable share. But importantly, on this block here are all the challenges and inefficiencies that are there in municipalities, commonly known, the issues of non-reflective tariffs by municipalities. The tariffs are quite low than what they should be billing on water, electricity, and then obviously means that the municipality somehow is subsidizing the services that they are rendering in their respective communities. Hence, there is then the need for the cost-reflective tariffs. Yes, we may not be able to do it at one go, but then progressively it can be then undertaken. Issues of poor billing, where you have a number of households that are receiving the services of municipalities, but they are not billed. Quite a number of issues that come into play when it comes to poor billing, and also poor debt management, the actual collections. We can bill, but it's another matter to actually receive and collect those monies. Then all of that talks to the revenue foregone, which is at revenue which the municipality is losing that could have ordinarily been forming part of the municipal revenue. So all of these issues are currently taking place in municipalities, but once again, with that disclaimer, not all municipalities, but just talking in general based on the statistics that I produced earlier from National Treasury. And then also, this is more of from a municipal perspective, what is happening, where the municipality has control over. And now then as we progress now into this topic of today, which we are posing, then should there be more given to the municipality? Because you can have more of these allocations to municipalities, or perhaps an additional functions given to municipalities, which will potentially come with extra revenues. Now, the issue is, if you cannot take care of the current, how can we then add another layer into a municipality? Because with what you have currently, you are unable to better manage and get the results that you are looking for. So these are some of the issues we've already touched on, looking at the formula of local government and all that pertains to that. But then there are these constraints within our fiscal potential in terms of what I've already discussed earlier on. But then municipalities have to find a way of then progressing from getting things right, and then also then start, instead of a top-down approach by national government just providing the allocations, then municipalities can be in a position of putting up some case studies and be able to get more allocations. So it becomes more of a bottom-up approach in that respect. And then lastly, on this particular slide, these issues or the implications of powers and functions. We've just highlighted here a few recent cases where there was a shift of the firefighting services from the local municipalities to the Western District Municipality in Gauteng, where then that means there has to be now a budget allocations towards the Western District Municipality. And if there aren't any additional budget, then it's going to cause some constraint now within the municipality to now fund this new function that they have to then perform. Also, City of Joburg and Mfuleni, they were allocated the primary health care services. As was a number of municipalities as well, where this has been shifted towards them. But then obviously the issue of budget, is it also coming through, is always comes into the equation. But we can learn from the Western Cape. I think this was about 5 or 6 years ago, where some of the allocation that the Western Cape provincial government has, and then they introduce an additional grant to then fund the gap of library services. Because most of these falls under the arts and culture departments when it comes to libraries. So then they were able to provide municipalities with that additional grant because of that mandate that ought to be provided by the province, but municipalities were rendering those services. So the same also ought to be true in other provinces and other municipalities as well, where they have some of these provincial mandates that end up falling on to them. This is a revenue management maturity model that the USO consulting group came up with, but a very good one. A lot of organizations have made reference to it and are looking into it. This was reported in 1920, where you look into what ought to be a model for a maturity model or methodology for a municipality insofar as the revenue management is concerned. Firstly, getting the administration right, the issues of billing, the customer data, then the data analytics that ought to be there, because there's a lot of data that you have as a municipality when it comes to your consumers or the citizens in that respective community. Then ensuring that we are customer centric, because if you go into some places, you know, for government and municipalities, it's as if you are doing them a favor by coming in there. There is no focus on the consumers. You have to just wait in line. And yeah, I think it's something that we definitely have to work on in government, just like it's done in the private sector, where customer is king. The same ought to be true within local government or just government in general. And then the revenue coverage, ensuring that you are billing all your citizens that you have, as well as then converting what you are billing into actual money into the bank account. Because I did say this earlier, and we have seen quite a number of this high rise now in terms of debt for municipalities, because you are billing, increasing your revenue on top, but then there is no physical money coming into your bank account. And then that cripples the municipality, because then the expenditure patterns proceed and increase, because you already have what is budgeted for in terms of revenue, but that is not actual cash, because the actual cash is factored in the cash flow. But then you have a revenue on top, which is unrealistic, because you're not going to collect all of it. And then, but your revenue increases with that particular rate. And then that's why we now find ourselves with a number of municipalities which basically have deficits or experiencing deficits. Now, within all of these, as said, not all municipalities are in same levels. 5 levels are described by this report by Ngcobo, where you have from level 1 to 5. I'm just going to go into some municipalities that are deemed to be superheroes. Just going to read here on the side. These are those of dynamic revenue collection approach, high conversion rates, while also breaking the traditional boundaries of revenue coverage by exploring new as well as innovative revenue pockets, new streams of revenue that they can actually try to undertake. So now we have to then ensure that we understand where municipality is and their capability and capacity of if there was an additional revenue stream that had to be added there, or else would be causing more problem if they cannot manage the current situation. Yes, for those 4s and 5s, possibly yes, it's a definite yes, in actual fact, that they can be able to derive more and generate more revenues for their municipalities. And what causes some of these revenue challenges in respective municipalities? These are just the stats. In 1920, the high vacancy rate in municipalities, especially within the finance departments and also the top layer of municipality, and then the staff not being adequately qualified, not capacitated enough to actually render some of or perform some of these particular functions in municipalities. And then obviously a high staff turnover linked to that high vacancy rate, and no customer relations management policy. I've spoken about this. There's also a lot of loss of trust in respect of that particular municipality, and also no systems to actually monitor the reading of meters, because that's others, they call it a cash cow of a municipality in terms of making sure that you go and read the meters and then you correctly bill your consumers and also bill them timeously. And then lastly, the processes that are not yet digitized. But then obviously these are challenges that are there, but then we have to look at then the innovation and the solutions in that respect, because we know the challenges, and most of us who are listening or participating in today's conversation are mostly aware of some of these things, but definitely we have to start looking at what solutions are there for us to address what we are currently faced with. Firstly, like these two last blocks, in terms of no systems to monitor meter readers in this 4IR age that we are at, use of technology. There are meter reading devices that we can look at, which can also be linked to the app that customers can download and have, because if they can be able to look at what has been read in their meters, they can also just go and look at if that is the correct readings and address the things timelessly than waiting for the bill to actually come through, because it helps everybody where you ensure that things are done correctly. And then on this block, we're talking of the innovation opportunities when it comes to automation and integration of the processes within the value chain of revenue, because I did make mention of what is involved in revenue management. You are looking at the customer data that you have. You're looking at the billing that must take place, looking at the collection that must take place. You're also then looking at how to maximize and optimize the revenue that you have, in making sure as well that you do not have a high debt book at the end of the day. So when you automate all of these, as well as other systems within a municipality, such as the GIS systems, because that will tell you how many households you have within a municipality, and then you can correlate that data with the system of billing to check that you actually are billing all your citizens within your area of jurisdiction. So when you then bring in the factor of technology, we then can be able to run some exception report and then ensure that you've got all your systems integrated. And this becomes very, very crucial, especially for large metro municipalities in getting this correct, because you're dealing with very high revenues and also the type of customers that you actually have. Now, lastly, and about to end, I know I've spoken quite a lot, but I'm finished. This is the last slide that we have. Now, are these allocations adequate? Is the question that is being posed. I don't have the answers, but I presented the facts as they stand. Discussions are continuing in this respect, but I'm hoping my other two panel members will also be able to add on to what has been shared. We have learned that municipalities continue to underspend on some of these grants and what they are receiving. Also, the leakages within our own revenue sources as municipalities, not being able to receive what we have been able to bill, but also we also have not even touched on the inefficiencies with that which has been spent through SCM. As to the question is, are we receiving value for money in that regard? So now with these two factors that we have mentioned here, then there is that holding argument. Then are these municipal fiscal allocations adequate, or perhaps not enough for municipalities to render the services that they ought to render in a most effective, efficient, and economical manner? Thank you so much. Over to you, Ms. Peters.
Thank you, Mr. Ngcobo, for that very, very in-depth presentation. I think with the stats presented, we can truly see a picture of how finances are being managed within municipalities. And I think some of the comments that are coming through is that poor management or bad management, I think from top management, plays the biggest role in terms of utilization of the funds and the implementation of it thereof. But I think it's a good platform for discussions, definitely, because I think if funds are coming in and going back without actually touching a community, then it's really room for improvement and things that need to be addressed as a matter of urgency, I think, in terms of improving local government. So with that said, thank you, sir, for that presentation. I think let us take our first poll question in regards to what has been presented at this stage before we hand over to our panelists to come in with their contribution. So I'm going to ask Dan to just assist us to flag our first poll. And colleagues, this is the question that is being presented. From what has been presented, do you feel there is a need for more allocations to local government? Please go ahead and put through your comment or your answer to that poll question. From what has been presented, do you feel there is a need for more allocations to local government? Your options are yes or absolutely no. Okay, and here it is. The results for this, from what has been presented, do you feel there is a need for more allocations to local government? 56% of you said yes, and 44% said absolutely no. Okay, so thank you for your participation there. It's my pleasure now to call upon Dr. Letsepa Pakkies, the Director of Local Government Fiscal Framework from the National Treasury of South Africa, to make his contribution on this platform. Thank you, Dr. Pakkies. You can go ahead.
Thank you very much for inviting me. There's so much to ponder on if you listen to the presentation by Ngcobo. Just perhaps just to reflect in the reality that I face when I'm involved in the process of the division of revenue processes as it relates to local government. Just some of maybe interesting stats which are quite sad and bad is that, around 2/3 of our municipalities, they are showing some signs of financial distress from not being able, to pay the outstanding debts on time. They have negative cash balances, and around 83.7% of our municipalities really run the risk of triggering some form of an intervention. We are all aware that, our municipalities owe the water boards and Oscom a staggering 44 billion. And thereby that, I think, has, especially in recent times, compromised the basic services in terms of water and electricity. And it is the citizens that have actually suffered because of that. From where I'm sitting every day, we are faced with new challenges, scandals from municipalities being auctioned by their creditors to municipalities really being undertaken by communities. I mean, recently we dealt with the issue of Amatole, where they couldn't even pay the salaries, let alone to deliver the service to the people. Issues around communities taking over Bojanala, and you colleagues would be aware of the issues currently at Likwa Tema around the intervention there that was mandated by the courts. So all the reported failures, even on what you would consider the very basics of basic services, the water and sanitation, in many of these municipal areas, they are less life-threatening, but they are really concerning from an economic development point of view, because if you think about it, Dr. Ngcobo has alluded to the revenue sources that are afforded to municipalities. And the issue really there is that the services that have been offered to municipalities lend themselves in cost recovery. So if we're unable to then deliver those services, which means our finances are likely to be then constrained. There are quite a lot of issues that we are aware of. I mean, there is the billing systems that have collapsed in some of our municipalities. There's corruption, fruitless and wasteful expenditure in the billions. And all these colleagues, has really been worsened by the impact of COVID. And although, we are coming out of the pandemic now, it would seem in terms of the restrictions that hampered municipal, cost recovery services, but we're still in really a bad situation. And evidently, of course, we would all agree that, revenues from municipalities over these years, have suffered for one reason or the other. And this, I think we can also attribute these challenges to what is happening in the energy space. I know some of the metros have reported to us around the customers moving off grid, and those are the high consumers. So it then becomes difficult for them to then subsidize the lower end consumers if the higher end consumers are moving off the grid. So all these issues, coupled with some, poor financial management, of course, in some municipalities, some above inflation tariff increases, and really municipalities failing to optimally collect what is due to them, have really made things quite difficult. I think what we are seeing with the city of Tshwane now, with their Tshwane team, is really, a step in the right direction where a municipality implements its credit controls. So in the first week of having implemented that, they actually collected, I think it's around 300 million that was due to them. And this is money that they wouldn't have normally collected in the past, when there was a lack of decisive leadership at the top, but also lack of maybe perhaps a political will, which does show that even though we may arrive at a point where we say municipalities are underfunded, that there are some inefficiencies that are in the system, especially if we then fail to collect what is due to us as municipalities. And of course, colleagues, I am not naive to the realities on the ground around issues of unfunded and underfunded mandates, and actually the issues around the function shifts and how those have been funded. So there are a number of really unfunded mandates that a local government finds itself having to fund. I think the biggest of those really, which is under discussion, are in the area of the community libraries, but there's also some in the health care services. And I know that the Treasury is working with the metros as a start to try and address those. Obviously, just having a clear policy directive in as far as how that will then be handled with. So it's not like we are not aware of those issues. So they do contribute towards the weaknesses in terms of revenue generation, or how municipalities deliver the service. And of course, I think I just want to perhaps respond to the issue of West Rand in terms of the function shift, to say, there's a framework that, encompasses, and has to be followed whenever we have a function shift. So you don't wake up one day and decide, because these other locals are not providing the service, or I can provide the service better, then I'll provide the service. So from the division of revenue, we fund the function where it is currently placed in terms of the relevant legislation. So if there is a change there, that change then needs to be communicated with us so that we can then divert the funds to the institution, in this case, a district that is now taking the function over. Colleagues, there is currently a review, I would call it a review for now, of Section 84 and 85 of the Systems Act, which really deals with the issues of district functions. And for us, I think we are eagerly waiting for that to be concluded, because it will then assist us in terms of ensuring that, the funds will then follow the function. We are in discussions, of course, with Western in as far as this function shift is concerned, and there needs to be a consent from the other locals as well to say, indeed, this is a function we'll no longer be doing, and therefore we can divert those funds from themselves to the district. And also there is also, I think it's one of those measures that are available to local government by legislation, but that have never been really explored. So the Western has proposed a fuel, no, it's not a fuel, it's a fire services levy. They propose to charge that. It's something that currently our minister is looking at, which is one of those things that would then assist in terms of local government, having other sources of revenue available to them. So all the municipalities, could always apply for this. I know there's a team in the Treasury that is also looking at a business tax as a business tax as it relates to your more affluent municipalities, because of course you are not always going to go to my municipality, for instance, in the Eastern Cape and say we want to introduce a business tax where there are actually no businesses. So those would be your more rural municipalities. So there is differentiation in the system as well in terms of what it is that you can do within your jurisdiction. Having said that, colleagues, I'm sympathetic to the calls for additional funding to local government. Dr. Ngcobo, the presentation that you made, just to update it with the current numbers as were presented by our minister on Wednesday, is that the share of local government is currently 10.4%, between 10.2 and 10.4% over the MTF, which is the 22 medium-term expenditure framework, and there's quite a number of discussions emanating from budget forum as well as to whether that is sufficient or not. I think I've got my view, which I'm going to express at the end, but I just want to say, even though I'm sympathetic to local government issues as it relate to some of the external factors that have influenced a government, we cannot really turn a blind eye to the large inefficiencies in local government, as reported by ourselves as the Treasury through our monitoring systems and the early warning systems that we have. But also the AG has, over the years, expressed concerns around these issues. And you have really covered them quite nicely. The under expenditure there, and in terms of the conditional grants, the many conditional grants, we've got 20 direct conditional grants to local government. And I can tell you now that almost all of them underspent at the end of each financial year. But there's also some misuse of funds, and many municipalities, incur spectacular amounts in terms of irregular, fruitless, and wasteful expenditure. And we are aware of corrupt activities, and there's in other instances, incompetencies that have been found, and lack of consequence management. I think management is a big issue, but hopefully that is improving, because I think from what has been reported in the media engagements that the Treasury has been having with the various delegated municipalities, is that really there is commitment, from the political heads to hold or to assist, the municipal managers, in distributing this, consequence management. So it's quite important that, we take those into account, that we are not playing in the local government space, that there are things that we can clearly do and do better, especially as they relate to matters that involved a supply chain. Not so long ago, everyone was, reflecting on the stadium that was built by one of the municipalities in the Eastern Cape, which cost the state 15 million, funded from the grant system, but where you could just see that, that amount was way too high for what was delivered, So in answering the question really, or in reflecting on the question of whether, a local government share of nationally raised revenue is adequate, we need to be reflecting on that as well, and for sure, in this constrained environment, fiscal environment that we're in, increasing the pool of funds available, may require that maybe we do things better, as local government practitioners, both from the revenue and also from the expenditure side. There are issues, on how municipalities can fully exploit the revenue potential that they have. And it really starts with the kind of revenue sources that are available to us and how we can maximize getting from those. I know we are also taking the borrowing policy framework to cabinet so that we can facilitate, better and prudent borrowing, invite, a lot of players in the space so that, municipalities can tap into that quite adequately. The development charges have also emerged as an area of untapped revenue potential. So those are perhaps before we can think of additional levers that can be provided, is just looking at what do we currently have that we can make a maximum use of. Of course, the issues around the prudent financial management of these scarce resources in order for us to attain value for money is ever more important. So municipalities really, can expand their revenue source base, beyond the transfers and make more effective use of their revenues. And by making effective use of their revenues, really, it's where we start looking at the composition of local government spending. Dr. Ngcobo has spoken about, the share of employee cost and the bulk service cost, and that figure really masks huge differences, from one municipality to the other, and other municipalities really they're spending in excess of what is prescribed in terms of the guidelines that the Treasury has provided. And that is a really shame, because those municipalities actually, they are in the lower end. So it is your more rural and small municipalities that are suffering from that, where they are actually using a large chunk of their revenues, which is equitable share in their case, to pay salaries. So all those things, colleagues, would then need to be within reason. But from I think the spending by programs, we've also seen that spending in the governance and in administration has over the years increased quite substantially, even increasing more than spending on these trading services, which actually bring us a revenue. And that is quite alarming, because during the same time, the number of municipalities in the system have actually come down, meaning that the expectation was that spending on admin and governance arms of municipalities would have been expected to come down. So we do need to relook at that, and the evidence we have with us also suggests that that there's no a correlation between a better performing municipality and the one, that actually spends quite substantially in terms of its administration. In fact, the ones that are doing well currently are those that have lean administrative structures, meaning that there is room also to change the composition of expenditure so that we are more targeted in our approach, and we spend a lot on those assets of ours that would help us to then generate the revenue. Having said that, Honorable Chair, allow me to reflect on, I think it's undeniable that local government plays an important role, in the delivery of services, that are critical, at translating the policies that are aimed at eradicating poverty and inequality, into concrete programs of action. It is therefore, I think, important that, we from all sides, I think national as well as provincial government, we remain committed to properly capacitating municipalities to fulfill their roles, and then I think this suggests that we haven't done that properly before, and that is why we've embarked on the review of our capacity building efforts as national and provincial, and hopefully what comes out of that is going to assist us to better support municipalities. But I mean, the blame does not solemnly lie on us, because some of these issues we do raise with municipalities, but they are not taken into account. So it's also important that municipalities themselves, must conduct, some change management. They must demonstrate the willingness, to correct and root out, those inefficiencies that are clearly there sometimes. I think I've already spoken to the historic inaction in terms of municipalities collecting their money from us as the consumers of municipal services, and that has really led to them not being able to pay their creditors, and now their creditors want their money, so you can see the kind of a challenge that the municipalities would find themselves in. So some advocacy programs and campaigns really, emphasizing that, everyone needs to pay, would need to then be emphasized. Maybe at this point, I would like to answer the question of whether, local government is underfunded. Yeah, but before, okay, yeah, in answering that, let me just say, just focusing on the money issue alone doesn't help us solve the problem. We have spoken about suboptimal performance in our grant system, where infrastructure money that is meant for development, has really not been spent. And really, I think we have pinned that down to the lack of shovel-ready projects and poor project management practices in some areas. Of course, we do get reports, around the roles around supply chain and all that, but I think in the main, the issue just lies in that lack of project management, which then ensures that even when funds are being provided, they are not being spent. And while we may, I think, it would be more appealing to attribute, these challenges facing local government, hampering service delivery to being underfunded by national. When you look at, other spheres are getting 40-something %. It is also important to note that, the local government fiscal framework is designed in a way, where the total funding that is available to local government, is actually taken into account when we decide on the allocations. And I was spoken to local government having functions that lend themselves to cost recovery, so we do need to then exploit that, and poor targeting of priorities also has been, an area of concern. By that I mean, we often say, show me where your money is going and I will tell you what your priorities are. Because it is, I think, implicit in that, if your priorities are on addressing unemployment, then most of your budget should go there. As in the provincial space, their priorities are health and education, and we are seeing that most of their budgets are going to health and education. So there is, clear realization of what your priorities are. What then hurt me most, because when we sit in these meetings, I'm an advocate for local government for additional money. And I'm happy to say, we managed to secure an additional 28.9 billion for local government over the medium term in order for us to fully cover the cost of providing services to indigents. So that all allocation goes into the equitable share to all the municipalities to then service, all the poor households. However, evidence has shown us that whenever we add money to the system, a large chunk of it goes to pay salaries. We have a study that does show that when we changed the allocation formula in 2013-14, introduced the new formula we're currently using now, and added additional money, the money that went to your poor municipalities, because that's where we thought money should be going, was used to then pay for salaries, which was a huge letdown from our side, because that is what we had not envisaged. We had actually thought that we would be increasing the coverage in terms of the people that are unserviced. So now, currently now, our analysis, it does show that, from our equitable share, the component that is actually targeting free basic services, we are funding 10.2 million in terms of the indigent households. Yet, only based on this, the data we collected from Stats SA, there's an underwhelming coverage of only 21.8% of poor households that are receiving the basic services from municipalities. So that does tell us that even though we may say the local government needs additional support in terms of finances, there is not the funds that are currently being provided to local government are not being used efficiently to cover the indigent households. So simply increasing funds to local government doesn't increase the services that are being delivered by municipalities. For me, that's really quite disappointing, and it makes a mockery of my calls for additional allocations to local government. Allow me to then pause there and just enjoy the discussion as it unfolds. Thank you so much.
Thank you, Dr. Pakkies, for that really wonderful contribution made. I think there are many key things that you spoke about that addresses vital issues in regards to allocations of funds. But I think that you hit the nail on the head when you speak about the fact that as local government practitioners, that we need to do things better. And I think that once we align to internal processes, the execution and implementation of that will really begin to bring a turnaround in terms of how funds are allocated. I love also what you said about priorities, and that when our priorities are clear, then funds can be aligned accordingly to achieve goals that local government issues need. So thank you for that contribution. It is my pleasure now to call upon Mr. Sihle Mbili, the President of the Institute for Local Government Management in South Africa, to make his contribution on this platform. Mr. Mbili, you can come on. Thank you very much.
Thank you, Program Director. Let me welcome the presentations done by the two presenters before me. I must say they've covered a lot of ground. I'm going to fill in some or put an emphasis on some matters on what they have already presented. Maybe on the onset, responding to this question, I would say, because the question is saying, is allocation adequate? I would say no, it is not adequate, but I will elaborate. The other question then that follows says, should we add more while municipalities are failing to spend what is given to them while it is not adequate? I will also respond to that question. But our position as ILGM, we are saying, looking at the allocation, it is not adequate. Maybe some of our proposals, we are saying, if National Treasury or Cabinet can look at a possibility of paying councillors' salaries from the national fiscus, it may ease the pressure that we have as municipalities. Now, if you look at municipalities, look at 1994, we were paying around or more than 4 million people in terms of social grants. To date, we are paying more than 17 million social grants. Now, it means, therefore, while the services that we render as municipalities, we have to improve them on a yearly basis. The revenue that we can source from our communities become lesser and lesser every day, because the indigent register in our areas, it increases on a daily basis. If you look at the number of people who are dependent on social grants, it tells you that we have communities who cannot pay rates. Even the rate of debts that has been brought by COVID-19, you find that families who were in a position to pay for rates where they reside, they no longer in a position to do so because breadwinners have passed on due to COVID-19. So those are the challenges that are being faced by the municipalities. Now, if you look at the position of National Treasury in terms of conditional grant for capital projects, you are only allowed to spend that money on capital projects. But the problem is, if you are given that money to build a hall, and you are not given money for repairs and maintenance, it will mean, therefore, you are going to build that infrastructure based on conditional grant that is given to you, but you are not going to have money for repairs and maintenance. I can tell you now, my colleague from National Treasury will tell you that in the country, only very few municipalities that afford to budget a minimum of 8% on repairs and maintenance. It means, therefore, the money that is given to municipalities for capital projects, at the end of the day, those capital projects, even if they are delivered, there is no consistent and effective repairs and maintenance that is implemented in that infrastructure. Those are the challenges. Now, if then you then say to us, should you still give more money? I'm saying yes, and I say it must be a multi-pronged approach. You give this more money to municipality to address these issues, but at the same time, you come up with a program for development in the municipality. Remember, we are building a capable, ethical, and developmental state that will respond to the needs of our people. Now, if you say to us, because you are not delivering, you are going to lower, or you are not going to increase the funding that is given to us, you may be killing not the municipality itself, but you will be killing the community in terms of their expectation. So as LGM, we are saying, let us capacitate our officials, because what we have realized in terms of blockages, now I'm going to blockages now. In addition to what was presented by Dr. Ngcobo, the other issue that we have is the filling of critical positions in municipalities. You will find that some municipalities, because of politics, that's why as LGM we are saying we wanted to professionalize the space. Because of politics, you will find that some municipalities, they take more than 2 years to fill critical positions because of infighting in terms of who should be employed. And it ends up municipalities failing to employ suitably qualified personnel to deliver the expectation. Now, that is the reason why we're saying a capacity that we need should not only go to officials, but it should go to councillors as well, so that councillors will also understand what it does mean if they will pressurize officials to employ officials who are not suitably qualified, because at the end of the day, we are defeating the purpose of our existence if we are employing officials that cannot deliver to the expectation. So that is why we are emphasizing the point of capacity building. Now, other matters as well that are leading to blockages. WULA, Water Use License Act as well. At the time that they take, the turnaround time is minimum of 18 months in terms of them approving applications that are done by municipalities. Processes of EIA. Those are other matters that make contribution to the blockages in terms of the expenditure of the capital grants that are given to the municipalities. But I agree with Dr. Ngcobo to say, maybe we need then to improve on forward planning, because if you improve on forward planning, you plan for 3 years instead of 1 year. I must make a case because I'm coming from a municipality and I am a municipal manager. When I became a municipal manager in 2013 in my municipality, we did have a similar problem, but we then came up with a plan that said to us, we must then budget for 3 years. Now, for the first year, when we introduce a capital project in your budget, you introduce it for planning and design, so that you do not put budget for delivery of that project in a first year, but you introduce that project for planning and design, so that you allow these other processes, WULA, EIA, and other studies that need to be undertaken. We also, you also, when you have a capital budget of 100 million, for example, you do not budget for 100 million, but what you do, you have a multi-year project part of your budget. You then, in terms of over 33, you commit more than this 100 million that you have in that particular year, so that when you are faced with challenges in one project, you can then reprioritize. You take money, you then fund a project that has no challenges. So as a result, for the last almost 9 years now, we are spending 100% every year without fail. That is where we are going as municipalities to say, when you budget for a multi-year, and you do not then target what you have. If you had 100 million, you then commit more than 100 million projects, so that you will be in a position to deal with the issues or challenges that you may face in the process. Now, coming to issues of balancing or put a balance between compliance and service delivery. Sometimes there is a problem of a treasury personnel in municipalities, if not both in provincial and national government. You will find that in treasury department, their focus is on compliance. Their focus is on compliance, and as ILGM was saying, let us have a healthy balance between compliance and service delivery. Because if you will comply, but your turnaround time is not reasonable, you are defeating, say, service delivery. I'm lending to a process of SCM processes, where you find that in terms of SCM processes, you can easily conclude a tender process within a period of 4 months. 4 months, between 4 and 6 months, you can conclude a tender process. But you find that in some municipalities, they take even 8 months to conclude on a tender process, without having objections, without having maverick forums within the municipality itself. These processes are caused by, sometimes you'll find that some officials within a municipality will have interest in a particular tender, and they may contribute towards the delay in the finalization of a tender if they realize that the tender is not going to end where they wanted it to end. So those are the issues we are addressing as well. So we're saying we must have that healthy balance between compliance and service delivery. We're saying to bid committees, it is not about you. The process is not about you getting a tender to someone you know. The outcome of a tender should not be predetermined, but the outcome of a tender should be determined by processes in terms of who should win a tender, in terms of the bid process, not in terms of who do we want. So those are the processes, or those are the blockages that we have, where officials, in some instances, we will block the finalization of a tender because it doesn't go according to their interest. Now, we are therefore saying, or we are encouraging managers to apply consequence management in those instances. But applying consequence management in municipality space is not an easy process as well, because you will find that even your political principals, councillors in some instances, when municipal officials or management are trying to implement consequence management, you will find that there will be interference, because some of these officials are branch chairpersons, are leaders in their own space where they live. You will find that some councillors, they were voted in by these officials. So we are dealing with those matters. If you're looking at the local government space, it is a very dicey, contaminated, and a slippery space. I always say to people, when you see an advert for a municipal manager, there are unwritten requirements for a municipal manager. For you to become a municipal manager, you must have guts as well to face all these challenges that are brought by the system in local government. So we are saying, therefore, we agree, consequence management must be implemented, and we are encouraging our members or our managers to do so. But we are dealing with this elephant as well, where you will find interference. So SCM processes, they play that major role. We are saying we need to have a procurement plan which must be respected by everyone, so that you do not have problems in terms of delivery, because failure to implement or to spend our grants as well is caused by, one way or another, is caused by SCM processes. So we are trying to implement procurement plans. We are trying to adhere to the implementation of the procurement plan, so that you deal with those problems. Now, coming to Maverick forums, their contribution, they play also a major role. They block implementation of capital projects in municipalities. Now, maybe National Treasury, my co-panelist, we need to play a role in terms of advocacy. In terms of DTI explanation or definition, local refers to South Africa, but Maverick forums or local communities, when they refer to local, they think that, as I'm coming from Ngcobo municipality, for them, local will be boundaries of Ngcobo municipality. If you are coming from Eastern Cape, if you are coming from Gauteng, they will accuse me to say, how do you give a tender to a person who is coming from Gauteng, because this person is not local. So the definition of local, which we agreed to, is South Africa. But in terms of Maverick forums or local municipalities, for them, they understand local as their local municipality or their district, not anyone coming outside their district. Maybe we need to do that advocacy campaign so that people will understand. Currently, I'm dealing with an objection of a bidder. His basis for objection is to say this person is not coming from the municipality. So how can your bid committees award a tender to a person who is residing outside our municipality? So even if you explain to these people, what it does local mean in terms of South African context, so it's not easy for them to understand. So we need then to deal with that issue, responding to Maverick forums. But because we do have someone from Dr. Pakkies from Treasury as well. If you look at section 217 of the Constitution, it says you can be biased to historically disadvantaged individuals in terms of your tendering process, provided you have a national framework, which we do not have after 20 years of democracy. So maybe those are the issues we must consider as well, for National Treasury to develop that national framework, so that you can as well respond to historically disadvantaged people. You can respond to these local Maverick forums, so that you can respond to their locality in terms of their understanding. So those are the issues that lead to blockages in terms of spending money that is given to us as municipalities. But going to revenue generation, it is a fact that there are municipalities where you cannot have revenue. You can do whatever you want to do, but you are not going to have revenue, because you are 100% grant dependent. So if you are 100% grant dependent, there is no source of revenue. You cannot raise tax anywhere. So you are dependent on equitable share. Now the issue that we have is the increase in terms of equitable share in line with the increase of communities' needs, because you will find that the needs, the rate of increase in terms of the needs of the community is higher than the increase that we get in terms of equitable share. Now, while the increase of the community needs is increasing at a faster rate, you will find that given the economic meltdown of the country, the increase in terms of equitable share does not match the need of the community. And when you lower the delivery of services to our community, you will then find the service delivery matches that we always have from our communities. So those are the issues that are faced by local municipalities. Where I'm coming from, I always say it is easy to manage a 100% grant-dependent municipality compared to a municipality that is has a revenue base. Because when you do your budget in a grant-dependent municipality, when National Treasury says your equitable share is 100 million, then they say your MIC allocation is 20 million. You know that you will get your 120 million at the end of the financial year. You know. So when you budget using that 120 million. But when you are a municipality that has a revenue base as well, you then anticipate revenue from your ratepayers. Now, when you anticipate that revenue, you then base your budget on your anticipation, right? Then, given the fact that our debt book is increasing on daily basis, when ratepayers are failing to pay you at the end of the month, now you then have unfunded budget. When you do your mid-year review, and when you do your budget adjustment, you are forced now to adjust downward. When you adjust downward, the needs of the community remain unchanged. You cannot go to communities and say, now your needs must be decreased as well. So those are the challenges that are faced by municipalities. Now, the other factor that we need to understand, councillors, when they come into a municipality, to them, a delivery of capital projects is about them coming back as councillors after 5 years. The choice of projects that they would want the municipality to deliver is not responding to the triple challenges of poverty, unemployment, and inequality. They are more or less subjective. They would want to see projects that is a quick win, projects that will then say to the community, this councillor has delivered. So those are the challenges that are being faced by us at the local government space as well, where we are trying to make councillors understand that the projects that we need to deliver are the projects that are aimed at reducing or responding to the triple challenges of poverty, unemployment, and inequalities. So those are the challenges we are facing. But yes, we agree. We are not doing enough, and there is room for improvement. But we cannot therefore say, because we are not doing enough, let us not get additional money. Let us get additional money, but use that money as well to do capacity building, so that at the end of the day, we will be where we wanted to be. We wanted to believe that DDM will assist as well. DDM will assist as well, because they will complement what we have as municipality. Because when we plan now, we'll know what is it that will be implemented by both the provincial and national government in our municipal space, so that there is no duplication in terms of planning. So that is where we are as local government. We do have the challenges as presented by Dr. Ngcobo. Yes, we agree, but we need then to come up with a clear program to deal with those root causes, so that at the end of the day, we deliver as expected by our communities. Additional funding is needed. While we get it, we must have then strict monitoring, so that there are no leakages that we normally have. At the end of the day, when we have a capable, ethical local government, we will deliver as expected. So, Program Director, I didn't want to repeat what was said by my speakers, but I tried to focus on other areas that I felt they need a particular focus. Thank you very much, and want to thank you for inviting us as ILGM. Maybe in future, we will appreciate if you can invite us and present our document on professionalization of local government. We do have a paper, a developed, researched paper on our position on professionalization of local government, because it can add or contribute towards the building of this capable, ethical, and developmental local government we are anticipating. Thank you very much, Program Director.
Thank you, Mr. Mbili, for that contribution made. Colleagues, with regards to just attending to some of the questions, we are short of time, so we will just go quickly to firstly our second poll question before we handle one or two of the questions posted on the Q&A tab. I also just want to make reference to our chat box. Colleagues, you are welcome to go ahead and read some of the comments. Thank you, Mr. Ngcobo, for answering and also just contributing to the chat and answering a whole lot of questions on that. So you are welcome to go and see the discussion and the debates going on in the chat. I'm going to ask my colleague Dan to just put up the second poll question very quickly before we handle one or two questions from the Q&A. Dan, if you can go ahead. Okay, colleagues, this is the question that is being put forward. Who is more effective in serving our country's citizens? The options are: number 1, national departments; number 2, provincial departments and SOEs; and number 3, municipalities. Please go ahead and put through your answer for that poll. I will just give it a few seconds. Okay, and here are the results. Who is more effective in serving our country's citizens? 58% of you said municipalities, and 21% of you said national departments together with provincial departments and SOEs. So thank you for participating in that poll. We're going to go through to our first question on the Q&A chat. And I see Dr. Ngcobo has already indicated that he would like to answer this question live. The question is: what impact has the lack of effective oversight by National Treasury, COGTA, and local government resulted in underspending of MIG grants especially? Dr. Ngcobo, if you can come in and just answer that quickly.
Because of time, I'll try and be as quick as possible. I think we did touch on it, and Mr. Mbili as well did touch on this particular aspect, because you can't look at some of these underspending in isolation to all other factors that is actually out there, because the municipalities are autonomous, whereby they need to run their affairs in a manner that they deem appropriate for them to do that. Yes, there is support that is provided by other departments, the treasuries, COGTA, and even SAGA as well to some extent. So, but at the end of the day, it's the municipalities who must ensure that they spend the allocations that are there, notwithstanding what we did touch upon earlier, of the hindrances and the challenges that is actually out there in municipalities. So it's not about getting others to ensure that oversight is there. Remember that municipalities have councillors who ought, or the council, put it that way, who ought to ensure that they exercise the required oversight in terms of the spending and non-spending thereof. Thank you so much.
Thank you, Mr. Ngcobo. I think let's give an opportunity for closing statements. I'm going to ask Dr. Pakkies to maybe just give her last comments in regards to today's discussions. And thereafter, Mr. Mbili, you can also come in with closing remarks, and Dr. Ngcobo, and then we will close. Thank you.
Thank you very much, Program Director, and thanks to the colleagues for this interesting, take on how we fund a local government. Particularly intrigued in terms of, some of the levers that are available to us, as the other spheres of government in terms of assisting local government. And also that's when I borrow from Dr. Ngcobo in terms of, that the accountability at the end of the day rests, with municipal councils. And we would, I think, appreciate, that there are underlying problems, in the rising expenditure at local government, but that there is some support that we are required by Section 154 of the Constitution, that we need to provide support, to local government. And as well, seeing that municipalities are showing signs of collapse, we then have to intervene. And I think there is a study that was done by PARI not so long ago, which showed that actually, we can and we should be targeting coming in quite earlier in terms of the interventions process, that we often intervene when it's late and when there isn't much that can be done to salvage municipal issues or problems, So I think we are witnessing, that there is really challenges that at local government, and as indicated, Budget Forum is currently looking at the reform of the whole funding system of local government, whether it is still meets, the assumptions that we made, but we could do much better as local government in making a case for ourselves if we try and improve the inefficiencies in the system and do better in terms of covering as much communities in terms of the basic services, but also putting proper plans in place in terms of ensuring that we spend the conditional grants that are being provided to us, because there's nothing as disheartening as making a case for a sphere of government that would still return the funds, even though there's still a need on the ground for those funds. Thank you very much.
Thank you, Dr. Pakkies. If I can just ask Mr. Mbili to just share your closing remarks.
Thank you, Program Director. No, for us as ILGM, if we can be successful in the professionalization of local government, we can overcome all these problems. But elements, if I can unpack what we mean as ILGM in terms of professionalization: one, employing suitably qualified employees in all positions of the municipality, and political parties deploying capable and ethical councillors to municipal space. Secondly, depoliticization of the administration. We protect administration from politics, so that administration will run as administration. Number three, capacity building for both employees and councillors, so that they always match the improving trends of local government on needs. Lastly, implementing consequence management without fear or favor, so that at the end of the day, we deliver what is expected. We therefore feel as ILGM, professionalization will be the answer if professionalization will get buy-in from all stakeholders to ensure that we deliver what is expected. So that is our position. In a nutshell, we believe that if we will win on this big elephant of professionalization, we will see a better space. We will see a municipality that will live in line with the objects of local government as enshrined in Section 152 of the Constitution of the Republic of South Africa. Thank you very much.
Just lastly, as we close, I want to take the opportunity again to thank each of our participants for joining us today. Truly, this platform is a success because of your participation and your engagement. So we thank you for availing yourselves to be a part of this platform. Once again, a very special thank you to Future Cities Africa and to the Municipal Edge for making this platform possible, and special thanks to our platinum sponsor for today's session, the CFO Foundation. We will be meeting again next week, same time, and our session for next week is going to be Beyond the Numbers, Strategies for Growing Local Economies, and we trust that we will have better engagements even on the session next week, which we look forward to. So once again, thank you, and enjoy the rest of the weekend. Thank you.